This is the Bank Nifty daily charts. You can see another red candle formed, but the market didn't break yesterday's low, nor did it break yesterday's high. It was range bound today. This is kind of how the day went. So the market broke this resistance in the first candle itself, went up, opened up, gap up, and stayed around the big candles 50%, right? It was in around this range for a very long time and then finally cracked to cover the gap. Essentially, what we did in trading today was constantly directional trades, stop losses were getting hit. So say here I was expecting the market to go down, it went up. Here again I expected the market to go down, went up. Here I expected the market to go down and the trade was successful. And eventually here and somewhere here I was expecting the markets to go up. No, it was a 5-minute chart. We were expecting the market to go up around here. We got some trades and eventually exited. So in terms of directional, we've got some work that was working for us. Lots of stop losses were hit, but in the overall picture, it gave us a clear indication of where the market would head. Now, coming to tomorrow, what is our plan for tomorrow? Essentially, this is no longer valid. Our high of today is going to be a level that we got to look for, which is around the 35,050 range. So this is going to be a critical level to ensure where the market can potentially go. So that's one level we're going to be keeping an eye out for in case the market can break, move here. There is this gap, so this 36, 500, 600 levels can get covered if the high breaks. Now when it comes to the low, the market, if it continues and breaks the low, we've got this swing low around 34,000. That's going to be critical, right? So we've got a low of 34,400 odd levels, and if it goes below this, it can come to about 34 odd thousand. So this is the kind of range that we're looking at, right? 34,000 to about 35,500 levels for tomorrow. Again, today was a day where we got considerable decay. Yesterday, the market closed around 730 odd levels. Today, the straddle has closed around 538. So there was considerable amount of decay. Towards the second half of the day, there was quite a bit of swings. Um, but overall, we've got a slightly positive delta only because this swing happened in these sharp moves here. We had to keep adjusting positions. So we have about 4% positive delta. So if the markets open up plus, we're great. We've again built our positions where we've used only about 70% of our overall balance that we can use. We've got some may not deliberately not using 100 just because in case these market swings, because if you see the daily charts as well, you can notice that the markets continuously just moving downwards, so there can be some amount of corrections. You can see all of these days small corrections and then the market moved up, then again down, up. So over here it just seems very sharp selling. So one of the things that we're looking out for is maybe there is enough of supply starting to kick in so the market can potentially bounce back. If it doesn't, then we're going to be keeping an eye on these 34,400 and then 34 levels to kind of keep adjusting our positions. Overall, like yesterday, we've got almost 1600 point spread. Our objective is to keep that decay in, right? We're coming into a Wednesday with 530 odd straddle prices left, so there's a lot of premium still left to be collected for the week. But again, like always, we're going to build positions slowly, take some directional calls if we can to build positions so we can end our weeks in profit.